that tells me I haven't checked your messages. Let me see. What'd you say? Oh, 1 second, guys. Okay. Second, let me put my phone away. What was I saying? Oh, talking about the NQ. Okay. So I analyze on NQ because the data comes straight from the CME. So if a low gets taken on NQ, then I deem it to be more of like true data. Whereas like on NAS 100, it doesn't take out the low or something, and you know, I might miss out on something. But I enter on CFDs. I just have wider stops just in case I do get. I mean, it takes out the low on one chart and it does it on the other. That as well as if I do take an out, it is what it is, right? It's the cost of doing business. That's how I look at it. Okay. I'm gonna get started right here. All right. If you guys got questions, just wait until the end. Actually, you can ask me questions along the way, but just keep it related to whatever I'm talking to. And then at the end, you know, we can get over whatever questions you might have. All right. Building your higher time frame bias / narrative. I wanted to go over this because this one I'm gonna start off with, and then we can do entries on a later day, or we might even go into entries today, right? Depending on time. So building your higher time frame bias / narrative includes two important things. Okay. Liquidity obviously trumps this, but they're both very important to figure out your higher time frame bias. Okay. Liquidity and inducements. We obviously prioritize liquidity more, but at the end of the day, you have to tie in both of them together. They're not separate. You have to look at it together. All right. Microphone volume is very low. Is it low, guys? Let me know. Now you're good. Okay. Just turn up the mic. Wow. Turn up the mic volume. All right. So liquidity and inducements. How is liquidity built in the markets? I'm pretty sure you guys all know this. If you guys don't, take a screenshot of this so you guys understand. Okay, liquidity gets built in the markets once highs and lows start getting respected. Okay, so I drew a simple diagram right here. Just understand once we respect the low and move away. Okay, and what constitutes as it gets respected, right? Once it comes into the low and moves away, that tells us it got respected. So when a high or a low is respected, we build liquidity. Okay. Does it have to have a BOS to create liquidity? Yes. I'd say yes. We want to have a good reaction out of there, right? Sometimes it'll take out internal. You feel me? Sometimes it'll take out internal high. So let's say we have, let me draw this out. So we have this. Sometimes it takes out internal. Make sense? But I would like for it to break structure again. So once we got that break of structure, we now know we have liquidity below. All right. If it just respects it here, has a little bit of a reaction, and then goes lower, all right, it's not really that significant to us. And also, if it does pull back and go lower, there's no liquidity. You get me? Let's say it moves away. Is there liquidity below here, guys? Simple question. So let me redo this. For you free guys, everyone that's in here, that's not part of the course or the lifetime member or monthly member, if we had price moving to the upside like this, okay, and it did this, do we have any liquidity anywhere within this diagram right here? This one. You guys are saying yes. Where's the liquidity? Talk to me. Okay, everyone that's saying no is correct because we didn't have the low respected yet. If price was to go like this, come back into the low and move away, now we have liquidity. You feel me? And if, let's say, we had price going like this, comes into it, respects it, how do we build liquidity? I want to see that break of structure to the upside. If it comes here, we take something out. If we move away, do we have liquidity below here? No. Okay, perfect. Screen not working. If the screen's not working, please leave the room and rejoin. Please and thank you. All right, so we'll get into liquidity blocks in a second. Or actually, I will talk about liquidity blocks today because I believe someone asked me about it on the last webinar and I didn't get to answer it. But a liquidity block, okay, we'll get into it in a bit, like when we actually go into examples and stuff of certain entries, etc., etc. Okay. Now, if this is how we build liquidity, what is an inducement? How does it look like? Right? An inducement is basically every time price breaks above highs and lows, right? We're inducing a different set of traders. So if we're moving to the upside, we break structure to the upside, right? We've induced buyers, okay? And then price pulls back, we take out the high again. What do? We induce buyers. We have to understand that an inducement does not necessarily tell us we are ready to move in the opposite direction, okay? So just like this over here where we took out the high, we don't start selling right away. We took out the high again, we don't start selling right away. And just because we took out this low does not mean we start buying right away. Okay? Sir Bias, I didn't get it. I'm still explaining, brother. I'm still explaining. Just sit through it and then hopefully it makes sense. If not, then I'll try it again. So, if we understand that liquidity gets built by lows being respected and inducements are every time highs and lows are taken out, we've induced some sort of traders. So we've induced buyers by taking out the high. We've induced buyers again. Okay? We take out the low, we induce sellers. That's all that the market tells me. It doesn't tell me where liquidity is, none of that. Once we start respecting highs and lows, that's when liquidity gets built. Okay? Now, these are two different things on its own. Okay? And the way to build your bias and narrative is by putting those two together. Okay? Mr. Abbott, could you close the comments? I can't close the comments because then I won't be able to know what you guys are saying. 1 second, let me start deleting stuff. Oh, wrong one. Second, okay, I'll leave that one. All right, so when you put it together, that's when you know what your direction and bias is. All right, there's obviously more things that you can add on to it, certain confluences, like example, previous weekly high, previous weekly low, previous daily high, previous daily low. That doesn't necessarily give you the bias, but it does give you a confluence, okay? All right, so now when you put it together, this is an example right here. Okay. We have liquidity to the downside. Why? Why do we have liquidity below here? Let's see. Guys, answer it. Respected and moved away. Perfect. Okay. Low respected. That tells us we have liquidity. to the downside. All right, we respected the low, we moved away. Okay, now another thing is, obviously I didn't mark it out to the left here, but let's say there was some sort of POI or some sort of, let's say we had something like this over here. All right, we had some sort of POI or order block here. Let me, oh, let's drag that higher. Okay, I'm a little extra, guys. All right, so we got some sort of POI, whatever. Price comes into it, respects it, moves lower. What does that tell us? So us respecting this high to the left, what does that tell us? We have liquidity above. Exactly. Okay. Now it comes back into here. We don't buy here because we're also respecting this low, which builds liquidity to the downside. All right. This is just understanding the context right now. It's nothing about trading, right? Nothing about entries, nothing about taking a trade or looking for the setup yet. We have to first determine where the liquidity is and who's getting induced into the market. Okay. If we have, and I'll tell you this, getting your bias is combining both of them. If we have liquidity to the downside here, okay, and we just went to the upside, induced buyers, and we also have liquidity to the downside, we've taken out liquidity from the left, all of that, what does that tell us? That tells us there's liquidity below, and we just induced buyers. There could be, sure, sells, but not right away, right? There could be a sell opportunity. It doesn't tell us we're going to start shorting right away. That's what everyone has to understand. Just because the highs were taken doesn't mean we short right away. Yes, after confirmations. Confirmations come how? By price engineering liquidity. Okay? All right. So we have liquidity to the downside. We've just taken out liquidity at the highs. We're coming to the downside. Okay? And what do we do here, guys? We print a high, which becomes the LB. Okay? So let's say the liquidity block. We move lower. Okay, let me rewind that for a second. Why is that an LB? Let's see if everyone is on the same page. Why is that area an LB? Why is it a liquidity block? Who can type up what the definition of a liquidity block is? Okay. Okay. All right, so a liquidity block is formed once, or let's say this. A liquidity block is a high or a low that's printed after running a level of liquidity. Okay, so this is the high that's printed after running a level of liquidity. Okay, simple as that. But you also have to remember there's more context to entries than just a liquidity block. All right, so we'll get into entries a bit later, but there's more things to it than just there being a liquidity block. Okay, how can I start this sound? I can't hear nothing. Have you tried? Wait, you can't hear me, so I can't even tell you what to do. Someone type it in. Someone reply to him. Tell him to leave and rejoin. Okay. So we've taken out the high now. We've printed a liquidity block. We moved to the downside. We printed a low here. Okay. We pulled back and went lower. All right. Now we can start looking at the internal highs and lows. All right. Because now we have price coming into this low. And what does it do? We didn't take it out, right? We started moving away from it. So what does that do, guys? We already have liquidity here, and it just respected it. What is that called? Engineered liquidity. Perfect. Some of you guys type really fast. This guy typed it before I could even say it. But yeah. Anyways, we got engineered liquidity at the low. Price moved away. Now we can actually look at this whole area. Okay, and look at the internal if there is no internal on the same time frame. If there's no internal on the same time frame, it depends. If this is like the 4-hour time frame, you want to low key see something on maybe on the hourly or whatever. You could go down like one time frame to get a better look at it. But typically, I would like to see some sort of high or low, or at least, and I'll give you an example. Let's say some sort of I'd say a wick on the higher time frame. So if you're on the 4-hour time frame, let's say it's a wick over here, and then you have price respecting the wick and building at the high, and then takes it out, right? Then that tells us we got liquidity taken, right? Because you have to understand a wick on the higher time frame is a high or a low on the intraday time frames. For intraday, which time frame is best? I don't know what you mean by that. Like, yeah, restate your question. I'm not really sure if I understand. Okay, so, and what if there's no internal liquidity? I mentioned that. If there's no internal liquidity, actually, if there's no internal liquidity at all, let's say I'm on the hourly chart and this is the hour, yeah, let's say this is the hourly time frame. There's no internal liquidity. I'm not gonna take it. I'm not gonna look for anything. I'm gonna let price do its thing, right? I need to see, because sometimes you'll see there's like a wick here, right? Let me give you an example. Let's bring it up here. Let's say this is a price leg, okay, and then price pulls back, and let's say it does something like this, moves to the upside, and you'll see some sort of wick over here on whatever time frame you're on. So let's say you're on the hourly time frame. There's a wick over here, and you'll see sometimes price respect it a bunch of times, right? Maybe induce lower, come here, right? Maybe take out this high, but it's still respecting that wick. And then boom, take it out. And then you'll see it drop right away. Right? And this will be some sort of wick that's respecting. You feel me? That makes sense? Yes, no, maybe? Everyone following? Okay, perfect. So that tells us that we're building liquidity somewhere. Okay, because we have to understand a wick on the hourly time frame would probably be a high. This wick over here on the hourly time frame will probably be a high on the 15-minute time frame. All right. So that's that. Let's go back here. Any level where your eyes look liquidity is good to go? Yes. So if I see something like this happen, if I see something like this, which I like to call a liquidity channel, if I ever see one of these, that's a great target. Like, if I can cash longs towards there, I would, right? So let's say we have price, there's some sort of liquidity like this, and we got price, let's say, respecting an LB over here. Okay, price moves away and starts building here. Takes it out. My bad. Takes that out. I'm gonna be looking for some sort of longs on the lower time frames here in this area, right? Maybe price moves up. I look for something along the way, right? But ultimately, I'll be targeting this. All right. All right. Let's go back into putting it together. Okay. We get a reaction up. Okay. We've built liquidity to the downside. Do you guys want me to start from the beginning, or are you guys okay with me starting off where we left off? All good? Okay. Okay. So we respected the low. We built liquidity to the downside. All right. Now, this is, let's say, us putting it all together. We have liquidity and we also understand we've induced buyers here. So I'm actually going to type it up so everyone is on the same page. Buyers induced. All right. We've induced buyers. Now, what I need for price to do is take out an internal liquidity block. Sorry, not liquidity block, internal liquidity, and tap into the liquidity block. Okay. So we have an LB right here. If we get that reaction up, this is an entry you can take. All right. You can take an entry from there to the liquidity to the downside. All right. Now, if we're okay, if let's say this is the, how do I say it? Let's say this is the hourly time frame, but on the 4-hour, there's still more liquidity to the upside. Then I know we're overall bullish. Okay. So if there's more liquidity to the upside on the 4-hour time frame, or let's say a higher time frame, what does that tell me? That this is an area that price is building liquidity, right? It needs to build more liquidity to have that inducement, right? Because you have to understand we have to induce traders on all time frames. Okay? So if we've had this where we induce sellers here because we took this out, mind you, this is, I'm going ahead of myself. Entry number 1, we come lower, okay? We engineer more liquidity to the downside. Come trap. And why is it a trap? Why is it a trap? Why is that high specifically a trap? Okay, so okay, let me go back here for a second. How do people get trapped? Like, why is there a trap on the market? Okay, you guys already answered it. If there's an inducement, right? Because they go hand in hand. If there is, we'll go back here. This is a perfect example. If we have this break of structure to the upside, this induces who? Induces buyers. There you go. Okay. So what is this low going to be? Because we don't want to enter with retail, right? Or the average retail trader. We don't want to enter with the average retail concept. Okay. So we have to wait for a trap, right? This is going to be the trap because we've induced buyers here. So if buyers are induced here, it means they're going to wait for that pullback, just like they did here, right? They got the inducement of buyers here. Price pulled back. They looked for their entry at this low, somewhere here. Okay. Same thing goes here. They get that break of structure to the upside. They're going to wait for price to come into their order block or POI, and they're going to enter just like this. You feel me? That makes sense, guys? Okay. So that's why this is a trap, because the average retail trader, I'm not talking about all of them, because some people can make profit trading their strategy, but the average retail trader, or let's say the novice retail trader, will look at it, or will look at every concept just purely with structure. Okay. Jeramin, I think you answered. I don't know if you answered someone's question or if that was a question on its own, but yeah, fair value gaps are not a liquidity block. Okay, so this low right here would be a trap. All right. So going back to here, why is this a trap? Why is this high right here a trap? Why is this high right here a trap? I'll put it out red. Induced sellers, exactly, right? So we've induced sellers right here. We got that little break of structure, obviously on an internal level. Okay, we've induced sellers on an internal level. All right. Now our setup is shorts towards this liquidity right here. Okay, meaning every time price induces sellers on an internal level, I need them to get trapped for me to look for shorts. All right, make sense? Okay. Now we trap the sellers here. We have a liquidity block. And this is the thing. I get this question asked a lot of times where they say, okay, but we've respected the high now. Why don't we come for that liquidity first? Is that a question you guys have most of the times? Okay. The answer is okay, you have to understand that the market needs, how do I explain this? Okay, I'll say it like this. We must induce lower before we can go higher, and we must induce higher before we can go lower. Understanding that means this is not relevant to us yet because we haven't cleared the liquidity to the downside yet. Make sense? That makes sense to you guys? Say that again. So until the liquidity to the downside is taken out, there shouldn't be a reason for price to come above here unless there is more liquidity to the left up here. Okay, let's say we have this going on over here. I'll actually mark it out for you guys just so we can, let's say we got some sort of high here. Okay, price pulls back, prints a high here, and goes lower. Okay, if we have unfinished business to the upside up here, there are going to be times, and if we're heavy bullish, there are going to be times where we leave this liquidity because it doesn't need to come for it, and it'll just continue going higher, even though this setup looks pretty decent. Okay, and that's because there's still unfinished business to the upside. All right, that's when that typically happens. Okay, so if we're overall bullish, we have to understand these shorts are valid to take. However, oh, why did I do that? Okay, these shorts are valid to take. However, it is low probability. Why is that? Talk to me, guys. Why would these shorts be low probability? Let's say we're okay. Let me actually type this up for you guys. We are overall bullish. Counter trend, counter bias. Exactly. I don't really like saying trend, but nonetheless, same thing. Counter bias, right? These are counter bias moves. What does that mean exactly? That means if we are overall bullish, sometimes to build more liquidity, because sometimes it's not enough liquidity, right? You'll see the market respect the low a million times. Not a million times, but you get what I mean. A bunch of times and move away. And it doesn't even sweep it because sometimes it needs to build more liquidity before it can take it out, right? It's not enough for the market to sweep it. So if it's going to be a counter bias move, the market sometimes leaves liquidity to the downside and doesn't come for it. So yes, we can take a counter bias move, but we can take it here and here. And if it fails, that just means it's coming for more liquidity to the upside, and this will be a later target. Or we wait for this to get taken out, one or the other. Cut the risk, yeah, exactly, right? If it's going to be a counter bias move, I typically do not risk as much as I risk on a pro bias move. All right? Why do I keep doing that? I need to stop. Okay. Oh my God. All right. That's good enough. So we are currently over here, okay? Let's say we take a sell here, price sells off. We've taken out the low here. So what does that do now? Okay, we have more liquidity to the upside here. Let's mark it out. We have more liquidity to the upside here. What does this do exactly? Taking out this low. What does it do? Induces sellers. There you go. Induces sellers. That means, one second. All right. We've induced some sort of sellers. What the hell? All right. Sellers induced. All right, guys. We've induced some sort of sellers. Now, what does that mean to me? Do I start buying right away? Let's say we're on like the 1 hour time frame or even the 4 hour time frame, right? Do I start buying right away? Do I start hopping on the 1 minute time frame as soon as this low gets taken out? Exactly. Okay? We don't. We gotta wait. All right. So let's say we're on the 1 hour time frame. You can see right here, we are on the 1 hour time frame. We get this reaction up. Okay. Hey, please explain fractal nature and your framework. Okay. What do you mean by that? I'm so sorry. Like, I'm not really sure what you mean. The market is fractal, so whatever we see on the higher time frames, me on the lower time frames, that whole aspect of it, me saying that the market is fractal is just to tell you guys that whatever happens on the higher time frame will happen on the lower time frame, meaning that yes, we do have to. This is the thing. This ties into entries. Okay, me mentioning that the markets are fractal ties into entries. Okay, just because the market is fractal doesn't mean I'm gonna copy on the 1 minute time frame right away. I need to build that higher time frame bias, right? Because I've gotten that question asked a bunch of times where people were like, "Oh, but you said the market is fractal, right? So why can't I hop onto the 5 minute time frame or the 1 minute time frame and look for entries?" Because you have to build yourself that framework, right? That direction on the higher time frame, so you know where price is at. You feel me? What to do when SL is big or LB is far? You look for a confirmation. So let's say we have a liquidity block all the way down here. Okay. And I don't want to take what is this? I don't want to take a 1 to 2. I'm not going to take the trade like this. I'm either going to wait for it to come deeper into the LB. And if it doesn't, it's fine. I will wait for a confirmation entry. All right. Make sense? Okay. I'm going to stop reading the questions for a bit. I just want to get over this. So we've printed a low here. Okay. We get this little pullback. We get lower price action over here. We print this low over here. Okay. We swept this and we moved away. Now, this is very, very important. Okay. This part right here. So listen up. We've taken out this high. Am I going to look for a buy once we get this pullback? Everyone's spamming what confirmation do I check? I'm literally going to talk about it right now. So please just listen up, stay a little patient and we'll get into it. So if we get this pullback, yeah, everyone's saying no. So we wouldn't be looking for a long right here. Why? Why is that? Someone already answered it. Buyers are now induced. Okay. This guy read my mind. So because buyers are induced, I don't want to be looking for a entry right away. Okay. And within here, I want to look for some sort of confirmation, and the confirmation would be exactly what we see on this higher time frame. So let me just zoom out for a second. Okay. Whatever you guys see over here is what I need for the long, right? I need to see price build some liquidity. Whether it builds it like this or it builds it, let's say, whether it builds it like that, doesn't matter. I need some liquidity to be built. And then price can take that out. I can look for an entry. Okay? Make sense? So sometimes you'll see, what does it do? It's either going to build it like this, or price is going to move away, print a low, come back into it, move away again, and then finally take it out. Doesn't matter how we build liquidity, we need to build liquidity. Okay? And that's why I always say don't look at it as a pattern. Because if you look at it as a pattern, you're going to think, okay, this is the only thing I need. This is the best way for me to explain it, right? Because we got price respecting lows and moving away, so that builds liquidity. But we have to understand the logic behind how price builds liquidity. This is a perfect example, right? We respect low, we move away, we come back into it, respect it again, we get that inducement of buyers, and then we come trap them. This is what I need on the lower time frames in this area. All right, guys? That's literally the entry model. I need a liquidity block, and I need that buildup of liquidity and that sweep, right? So if there's a liquidity block, so let's go back here. Let's say this low over here, okay, the one I'm circling right now, is the liquidity block, right? Let's say that low is this one right here. All right. So if this is the liquidity block, I can take my trade as long as we have that buildup, right? We build liquidity, we come into it, inducement of early buyers, we trap them, all of that. Okay? That would be an entry. Make sense? All right, that makes sense. Do you see fair value gap for liquidity block? I've already mentioned it. I don't need to see a fair value gap. I would like to see some sort of imbalance, which tells me prices moved away, right? Pretty aggressively. But I don't need to see a fair value gap or any of that. Like, I just need to see some sort of liquidity block, right? It would be nice. It's a confluence, sure, but it doesn't need to. Difference between early. Okay, I'm not gonna answer your question right now because you keep spamming. I'm gonna answer it later. Okay, so if you spam, doesn't mean I'm gonna start answering it right away. All right. So ask me the question. If you want to spam, wait till the end of the webinar. Okay. I want to get through this. I want everyone to learn. We can't just keep answering that one question every time. All right. I'm not gonna answer that. There you go. All right. So what do we do here, guys? Webinar in psychology. We'll do that in the future. Or we can have that today too. Depends. Okay, so we have okay, this is also an important thing to keep in mind here, guys. Okay, we've taken out the high here, but it's also important because I'm pretty sure you guys, everyone that follows me or listens to every time I make a video, I always talk about looking to the left. Okay, and it doesn't necessarily always mean to the left here. Okay, when we're looking for buys in that scenario, but we also look to the left over here as well. Okay, and the reason I say that is because of this. Okay, let me first erase this. Let's go over here. Okay. Let's say I take this over here and I bring it, I'm going to bring this down here and redraw the same thing. Okay. I'm going to draw it like this. So we got price moving lower, prints a high. We take out the high here. Okay. So we've talked about how we don't necessarily like to look for longs right away because this high was taken out, but we also look to the left. Why? Because this tells us if we can actually long or not, right? Sometimes you'll see, and this is why I always say look to the left. We'll see that this high right here is respecting a high to the left. Okay, so if everything on the higher time frame is aligning and we're looking for that entry model, you could look for a long here, because not only do we induce higher here and trap, but we also are below this liquidity to the left. Everyone following with that? Everyone follows that? Talk to me, guys. Yes or no? Yes? Okay, I feel you. No. Okay. Gohar is saying no. Okay, let me restate this. All right. This could be a wick or some sort of high that price has come into. Okay, because remember, guys, we want to always tie back to how we build liquidity. All right. If there's a high here or a wick or something, the price is respecting here. Okay. And it moved away, broke structure. What does that tell us? Where's the liquidity? Where's the liquidity? Is it here or is it here? Is it above the red box or is it at this high? Above red? Above the red box. Exactly. So if we still have liquidity to the upside, and if we still have liquidity to the upside, price respected that, and we got this BOS, trap, and we still have liquidity to the upside, what does that tell us? There's unfinished business to the upside. We haven't taken out that liquidity. All right? Make sense? Can you talk about how to journal trades with this concept? Yes, I can in the future, at the end of this webinar. Guys, any questions you have regarding whatever's on my chart right now, please ask it. If you have questions that don't have to do anything about the chart, do not ask me. Ask me at the end. I'll answer those questions at the end. If you're asking me right now, your question is not gonna be answered at the end. Okay? So stop repeating the questions. All right. Let's go back into this. Does this make sense to you guys? Yes? All right. So if we have unfinished business to the upside, there's no reason for price to come below here. So that's why you'll see sometimes, even though we've taken out the high, we get something like this and we can enter. All right. That makes sense. Now, let's say we have this scenario, but price does this. Okay. Can we enter at this low? What's the reason? All right, perfect. So, because if we've taken out the liquidity here, okay, sometimes because we have to understand all the time frames, or let's say it all has to align, right? Just because we've taken out this higher time frame low doesn't mean we start buying right away. Price needs to align on, let's say, the lower time frames, or the intraday time frames. Let's say we're on the higher time frame for this example, okay? So what happens, or what typically happens here, is we might get an inducement of buyers here, and then price will actually come sweep the low once more and then have the move. All right? Make sense? If the low we took induced buyers, we can still take a trade. Is that a question or? I don't know if you're just stating something or if that's a question. If the low we took induced buyers, we can still take a trade. Are you talking about this low right here? Yes. Okay. So if I'll actually get into that on the next part, before we move on to the back to this diagram. So we've taken out the high, we've taken out the liquidity. All right. Means because we've induced buyers now, I don't want to see a buy below here. Because sometimes what will happen is this right here. That will happen. Okay? And then everyone's going to ask me, why did it happen? But you have to understand, we've induced buyers. Literally as simple as that. We've induced buyers. Stay away. Okay? Because you don't want to get trapped. Because you have to understand, if you don't see the liquidity, you're going to be the liquidity. All right? If you think that we're going to long here and you don't understand we've just induced buyers, what does it do? It's going to respect the low, build liquidity below there, have that reaction up, boom, trap. Okay? So it's all about patience. All right? Sometimes you'll see this happen. Okay? And it happens to me most of the times too. This happens. We've taken out the high. We had this move down. We've taken out this low. But because we've induced buyers, I want to see this low go. And what happens? Price respects it, moves away. Okay? Sometimes this is enough, okay, for it to move away. Because of that, I'm not going to look, because of this break of structure to the upside, I'm not looking for a long here. I'm going to look for a continuation within this leg, somewhere up here to the upside. And all I need is to go on the lower time frames, right? Because look, you have to understand, if this is the 15-minute time frame here, I can go on the 5-minute or the 1-minute, right? I can go on that lower time frame and look for the same thing. What do I need to look for, guys? I need to see the buildup of liquidity, and then I need to see, well, first I need to see a liquidity block. Then I need to see that buildup of liquidity above the liquidity block, and then I need to see that trap, right? So sometimes price will move away, and that's fine, because over here it might do something on the low time frames where, you know, we build some sort of liquidity block, we move away, right? Price starts building, starts moving away, and then comes back, or let's say the next hourly candle opens, we get that pullback, sweeps all that liquidity, and then moves away again. All right? You guys following? Makes sense? Yes, no? So what if we have liquidity to both sides at the time, how you decide to go buy or short? If there's liquidity on both sides, there's liquidity above and liquidity below. Can you answer that for me? Let's see. Don't trade, you wait. Exactly, right? You don't trade. If you don't know the direction, right? If there's liquidity on both sides, you don't know the direction. What does that tell you? Don't trade. All right, so start going back now. All right, so in this area, there would be a long if we have it respecting some sort of liquidity here. All right, make sense? So obviously I didn't really mark it out, but let's mark it out for you guys. Say this whole area respected something here. We had some sort of liquidity here. All right. That's the only reason why you can long here. Price moves away. What does it do though? It does print an LB for the future. Okay. It prints a liquidity block for the future. Price moves away, comes into, and I'm going to start, let me delete that right there, comes into the highs. Now, because we've induced sellers, we're going back into this right here. Because we've induced sellers, all right, where's the liquidity? Forget we have this, okay? Pretend that doesn't exist right now. We've induced sellers. Where's the liquidity, guys? Text trader. I've answered that previously, where isn't there liquidity below the low now? Remember when I said over here, I think it was over here, this was an entry even though now that we've respected highs. Why were we still able to take this? We have an LB, sure, but this is also liquidity, right? Why were we able to take this short? Let's see. Relevant liquidity, exactly. Because must take higher before going lower. Yes, exactly, right? We need to take the liquidity up here for it to, what's it called? I'm drawing a blank here, guys. Yeah, we need to take this liquidity higher before this becomes relevant liquidity. All right? Make sense? And if it does, let's say we do respect this high and we sold off. What's the reason for that? Can anyone explain? This is probably more for people that are actually in the lifetime membership or lifetime package. Higher time for bias, yes. Yes, but like I'm looking for something different, a different answer. Some liquidity below, exactly. We have more liquidity to the downside. Let's say we don't have this LB here, and we have something like this. Okay, let's say we got something like this. We have something like that. Let's say we got something like this, guys. Forget about this. Let's take this over here. What happens sometimes in this scenario when we have liquidity below here? What happens, guys? It continues. It might even take out some sort of high here and then come all the way down lower, or it might take this out, right, and tap into something. It depends if this was respecting something to the left. All right, so if this high right here, let me start erasing lines because it's getting too cluttered. I do this all the time. I need to stop using that brush tool. Okay, let's say this high over here respected some sort of wick to the left, okay? And we had some sort of something over here. What happens from time to time? We'll get this move up. It'll trap the sellers here because we obviously induced here. And then it'll short towards this liquidity right here. And this is low-key a perfect example on NQ this week. Perfect example. We'll go over it in a second. All right. So over here, let's 1 second. Okay, let me delete this, delete that. Okay, so let's say we don't have this though. Okay, I'm gonna move this to the side. move that to the side. Okay, let's say we don't have that over there. And there's an LB right here. We come into the highs. These highs are what now? This guy said full port. You relax. We got liquidity at the highs. All right. We've taken out sufficient liquidity here. Now these highs are going to be what? Known as a, let's see if you guys know it. We've induced sellers. So what are these highs going to be? Trap. Exactly. Right. So if the highs are a trap, we need price to respect it, move away, induce more sellers. How does it do that? We'll go over this example right here. We print a low, print a high, we induce sellers. This induces sellers. All right, guys? And this is also the same thing, what I talked about up here. There are times where we trap, okay? We've induced buyers, then we've trapped the buyers, induced sellers. A lot of people start looking for longs here. A lot of people start looking for longs there because what's the reason, guys? Why do people look for longs here? And they shouldn't. Pattern traders, exactly. You get a point right there. I don't know what to give you, but yeah. All right, pattern traders. If you're looking at it in terms of pattern, you think low taken, you start buying right away. All right, but the thing is, the market doesn't move in patterns. All right, if you're gonna look at it in terms of patterns, you're gonna get trapped a bunch of times. Sometimes, or let's say we've come into this liquidity here, and this is why I always say, okay, if you guys have to write it down, write it down. You know, if you have to tattoo it onto your skin, go ahead. No, I'm joking. Look to the left. All right. Always look to the left. If we got price coming into this low, just because we've taken out this low right here, does not mean we start buying. If we still have liquidity to the left. If this low respected some low to the left over here, you do not look for buys, even though we've taken out this low. Because the liquidity has still not been taken out. Yes, it's haram. Okay. The liquidity has not been taken out. So you don't look for longs here. You're going to get trapped. And what ends up happening, and this happens a lot of times, where we take out the low, we come higher, boom, we induce buyers. We induce buyers, and what happens? Price pulls back and gives them a little bit of a reaction, right? They get happy, and then, boom. And then it comes and taps into the LB here. Takes out all this liquidity that it built at, taps into the LB, and then price moves away. Okay? And moves straight to the upside. And usually, if you do get this scenario right here, I would be entering here and keeping my stop loss below here and holding it. Why? Because once we already have liquidity and it's engineered again, and it, oh wow, and it starts engineering again, once we get this false sell-off, this run up will be very, very, very impulsive. And sometimes you won't even get an entry. All right? Sometimes you won't get more entries, let's say that, because there are going to be times where on the lower time frames, there's going to be more entries along the way to the upside. All right, guys? That makes sense? All right. Now we're going to get onto the charts. Actually, before we head on to the charts, does anyone have any questions? Anyone have any questions? Sorry, let me restate that. Does anyone have any questions regarding the chart right here? Or whatever I've explained? Difference between, okay, I'm gonna answer your question just so you can stop. Difference between early traders, induced slash trap and inducement. Okay, so early traders being induced would be basically the trap before the entry. Okay, so that's early buyers. So in this scenario, you want to see early buyers before you get in, right? It's usually during the entry. I want to look for the early buyers. Okay, and even before the liquidity is taken as well. So once we get this move up, we've induced that right there. This inducement right here is the inducement of early buyers. Okay, because I want to see early buyers before the liquidity is taken. Make sense? And then same thing goes here for the entry. Want to see the early buyers. Where do the early buyers get induced? Right here. Trap. That makes sense? Do you consider an A plus setup when you bet the house on? I don't know about betting your house on. That's kind of crazy, but I do risk more. I do tend to risk more on A plus setups. All right, so can we get a short recap? Just invert it. Literally the same thing, just invert it. It's the exact same thing. Can you record a video of this, please? Sure, maybe in the future. I didn't record this, so it's not being recorded. It's not gonna be uploaded. But yeah, I might make a YouTube video on it. All right. Now, let's go on to. Okay, anyone have any more questions about this? Just this right here. Which liquidity block do you choose? A higher time frame or refined, lower time frame LB? Sometimes the liquidity block, lower time frame LB don't hold. Yes. So I do take higher time frame entries, and I like to take a higher time frame entry first. What's your YouTube channel? I don't have. Well, I have a YouTube channel. I just don't upload anything on it. Right. Everything I upload is going to be on InterEquity. I do have some videos on InterEquity, but they're unlisted for the free people. So, whenever we post on our Instagram story that there's a breakdown, it's usually me on on YouTube as an unlisted video. So, pretty much look out for those ones. And yeah, what stopped the inducement? What do you mean by that? What do you mean by that? Come on live on IE. Let's just say when it comes to live, I don't want to be dealing with a lot of questions while I'm trading. I want to focus on trading, right? So the seller induced on last diagram before going down. Seller induced on live. You're talking about this part right here? What's name? Are you talking about this? Start on the charts. I gotta sleep. It's 12 a.m. here. Oh damn. Then go to sleep, bro. I'm gonna go on my time. You feel me? I'll maybe start another webinar earlier. That way, people that it's nighttime for them. But nonetheless, let's talk about this. Well, let me just. I'm gonna delete all this. I hope you guys took screenshots of that. Actually, let me bring this back real quick. Guys, take a screenshot. If you guys didn't, I'm giving you 10 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, gone. Wait. Oh my God, gone. There you go. Okay, let's head on over to NQ, and I'm gonna actually do this. Leave. Let's go to recent price action because I did want to talk about this. This week was a perfect example of what I talked about, where we have unfinished business to the downside. All right. So we did sweep this low over here. All right, guys, follow. Listen up here. I hope you guys are following. All right. We've taken out the low here, and this is the previous monthly low. Okay. And like I always say, we don't start longing right away. All right. We don't start longing right away. What ends up happening? The week opens up, right? We get this ugly price action here. Why is it ugly, guys? I'll go on the 1 hour time frame. Why is it ugly? Why is it ugly, guys? Talk to me. Exactly. We still have some liquidity to the left is one thing. Okay, and if I just go on the 4 hour, let me see if I can see on the daily. Okay, the 4 hour. Okay, boom. Look at this. We have some sort of lows here that are intact. You can see this. Once we print this low, we came lower and took out this low, but we didn't take anything from the left. We still got this intact. That's one thing that you keep in mind. That's just one thing. But there could be a scenario sometimes price doesn't take out the liquidity from the left and just flies. Okay? But why do we get this ugly price action? Or why am I calling it ugly? Always it be liquidity left. Okay, perfect. Exactly. We came respected liquidity here. Okay. And if I go on the 30 minute, I think it looks better. Yes. So look at this, guys. We got all this right here as liquidity. Look at that. What is that basically on the lower time frames? What is that? That's basically what it is. We got that liquidity channel. All right. We got that to the left. It respected liquidity, sold off. Now, at the time, I wanted price below here. But unfortunately, that didn't happen. And this was during Asia, which is pretty diabolical. But anyways, that's another conversation for another day. All right. That's the liquidity. All right. And then we obviously have some sort of LB up here, even something here. Doesn't matter. Regardless, we have something that's going to be respecting. Okay. Now, we respect the liquidity here. Moves lower, does not take out the overall liquidity. Okay. It does take out this low, but it doesn't take out the overall liquidity here. So we still have liquidity to the downside. All right. What does that mean? There's unfinished business to the downside. We start moving to the upside. And what do? We take out the liquidity. All right. And we tap into some sort of LB and we short. And this is why I say don't pattern trade. Okay. Because once this low was taken out, I'm not going to sit here and say I didn't look for a long. I did look for a long here. Okay. I did look for a long here. But guess what? Price moved up, took this out. All right. What does that do? Takes out internal. Price starts selling off. Okay. We've taken out the internal. Price sold off. And what did it do here now? We printed a low. Okay. This is an LB, so I had a reaction up. All right. We printed this low here. We moved to the upside. And we broke structure here. Okay. And I'll go on the 15 just so you guys can see it. We broke structure right there. So we just respected the low and we broke structure. What does that tell me? We broke structure. We have liquidity. Where, guys? Talk to me. We have liquidity below. Okay? We start moving to the downside. Now, I'm not really looking for anything up here. What's the reason? Because there's still unfinished business up here as well, right? We still have something here. You can classify all this as liquidity as well, right? Overall, yes, we are going to get a little bit of a reaction here because it is some sort of LB, not the cleanest looking one either. But look at this. We've also induced, pulled back, and respected high. So we do have some liquidity to the upside as well. Okay, so that's why I'm not interested in looking for anything here, nor am I interested in looking for anything here. Okay, make sense, guys? Okay, now we get price. Let me start deleting all this. Okay, we got price respecting the low. Boom. We come back into the low. Now what does that tell me? We've done what? We've engineered liquidity to the downside. Exactly. We've engineered liquidity to the downside. So what do I need? I need price to take out some sort of buildup, right? Unfortunately, that didn't happen here. What do we do here, guys? We respected the high here. Okay. We took out a low here. Sure, we took out this high, but we didn't take out this high up here. Make sense? Okay. So that tells me I'm not looking for anything here. If price was to come above here, this would be an entry to the downside. Why that high? You tell me. Let me zoom in. You tell me. Why that high specifically? Why this high specifically? Because we came into the high, let's say, and take this in. We also have some sort of LB above it. We came into the high right here. We sold off and took out a low. What does that do? Induces who? Induces who, guys? Sellers. There you go. Then we came and trapped them, but we didn't take out the overall liquidity. So this up here would be a sell. If price was able to get up here, that would be a sell. Okay? Taking a sell here is kind of, I mean, it's hard because we still have liquidity above here. And sometimes price respects it, has a pullback, and then goes higher. That happens as well, right? If that's on the cards, I'm not going to try getting in too early because then this could be early sellers, right? And then comes traps them. And then the real move happens. If that's on the cards, if that can happen, why would I look for a sell? You get me? So I just wait. I let it do its thing. Price ends up selling off. Now, it actually takes out the low without giving an entry. All right? But we always have to understand this point right here. We still have this to the downside. That makes sense? That makes sense, guys? Okay. So since we have this liquidity to the downside, what can we do? We can still continue to look for shorts. Okay. However, because we've taken out this low, I'm not really too interested yet. Okay. I'm not interested in a short here. And that's because we've taken out this low. But we also keep in mind, we never took out the liquidity to the downside here. Let me go on 15. Watch this. Let's go back here. We didn't take out significant liquidity to the downside, which is okay. Make sense, guys? Why is this liquidity? We respected low and moved away. All right. Make sense? Okay. I'm going to continue. We move to the upside. We take out this high over here. We take out this high, which does what exactly? Induces buyers. Remember what I said, right? Because we've taken out this low, I'm not looking for a sell right away. I can't. Because we still have, and I'll go on the 5 for this. We still have this intact. So here, I'm not interested. Make sense? Okay. Once we do that, though, we do print an LB. Okay? We print an LB here. We start moving away. All right? We start moving away. What do we do here? What is this, guys? What is that? Liquidity channel. Exactly. We got the buildup. We have an LB. We got price coming into the trap. This is a trap. Why is that a trap? Because we had this break of structure right here, right? We've had that break of structure. This is price pulling back into the trap. Okay? So we got a lot of things. Boom. Respects the trap, moves to the upside, and takes out the buildup of liquidity. That right there, that right there is the entry. Okay? But you have to understand that this entry right here is a little bit more on the riskier side because we still have liquidity above. So, do you risk everything on this? I mean, you never risk everything, but what's your risk on this? Is it cut in half? Is it your regular risk? Talk to me. Okay. Whether you do 0.5, 1% doesn't matter. Like, it just has to be lower than your regular risk. All right. And then your target, and I'll tell you guys how to manage this position as well. Your target is obviously this low, but you want to manage your position accordingly. Okay? Meaning once we've taken out this right here, unfortunately, or not unfortunately, because this obviously plays out, but this is all liquidity now. So once we've taken out the low here, what does that mean? What do we have to do if we're in this position? It could reverse, exactly, right? If it could reverse, what does that mean? We have to go BE. You can roll your stops, sure. But you can also go BE as well, right? Especially if that's also on the cards. All right? I'll go BE in that scenario. And if I get stopped out break even and it plays out, like let's say we got this happening. Price pulls back, stops me out break even, and then dumps. It is what it is. You feel me? Charge it to the game. That's what I say. All right, so you take that stop loss above entry. You go break even as soon as this low gets taken out, and you're chilling, right? You can take partials at this low, and you want to partial at a structural low. Okay, this is your partial point right here, and then this is your target. The lows to the left. Make sense? Okay. So that's literally the perfect example of, let's say there's still unfinished business to the downside. All right. And when we went over it, exactly, Mr. Hamza G. You're spot on with that one. Okay. Hamza, you have to understand that we're not going to be right all the time. Okay. We're not going to be right 100% of the time, or else we'd all be millionaires. Okay. Or billionaires. But we have to manage it accordingly. If we're in a trade and there's a possibility of it reversing, why are you going to keep your stop loss where it is? You're going to take a loss, right? So you go break even, you avoid the loss, all right? And if you get stopped out break even, it is what it is. Now, this is another thing too, and I'll talk to you guys in a second. We've taken out this low. Some people can, if you have to understand, if there's a possibility you can long from here, some people will take partials here. Okay? I don't take partials there because it's not worth it for me. Okay? I would be partialing below this low. because I like to partial at structural highs and lows. All right. All right. That is pretty much it for this scenario. And the reason I wanted to go over it is because we talked about how you don't want to be trading with, let's say, patterns, right? You don't want to look at it in terms of a pattern, because if you're looking at it in terms of a pattern, we get this LB right here. People are going to start buying here, not understanding we still have liquidity or unfinished business to the downside. Obviously, in this scenario, we come take out this low and we don't go long right away. Why is that? Why don't we go long after taking this out? Liquidity to the left. So this is one of the signs why we got all this intact. We never took this out. Oh, my fault, gang. Boom. We still have that intact. Another thing is previous weekly low right here. Yes, I'm Muslim. Anyways, so we got price respecting the low. Boom, took out the high here. We started moving to the downside. You have to understand, why did we have this bit of price action here? Why did we play around here? Hamza, I know you were joking with that, but don't say that, please. All right. Yeah, why do we have liquidity to the downside? Sorry, no, that wasn't the question. What was the question? Why did we play around here? Why did price play around in this area the entire time after taking out this liquidity? Because no LB. This is an LB, right? This is technically an LB. It did sweep some sort of liquidity, right? What's the reason? Creating liquidity because we still have more. Okay, we still have more liquidity to the downside. That's the reason why I came for that. Okay, but why didn't we just continue selling after taking out the low? Why don't we just continue selling here? What's the reason? Okay, because this is an LB, you'll get some sort of reactions. Okay, the market's waiting for more buyers to step in. What happens? I'll go on the 15 for this. We took out some sort of high here. I know we didn't take this out, but we took out some sort of high. And then we came lower. And we engineered at the low. All right. Make sense? So it needed to build liquidity because there wasn't enough liquidity to the downside. That's pretty much it. All right. And that's something to keep in mind because that's how you can anticipate reactions. All right. That's how you can anticipate reactions. And if you're in a sell, let's say you did sell towards the previous weekly low, which is right here, or even towards here, let's say you did sell towards there. You can anticipate reactions within here. Okay. And that's a perfect area to partial. All right. And I'll give you that example on German 40, the trade that I took and, I didn't even partial at. We'll talk about it just now. I entered here. And I'll also tell you why I didn't partial. Okay. But we got this respected. Our price respected that. I've already accepted the BE, so if I get stopped out break even, it is what it is. Obviously, it's gonna hurt, but it is what it is. So We've taken out the liquidity to the left. Look how we respect it. Move away. We've taken out lows. We've induced 2 here. Actually, let me start with the higher time frame just so you guys understand where we're at. Okay. We're selling off from all-time highs. So automatically, I already understand that sometimes what happens, we take out the liquidity here and it'll move all the way back up. That also happens as well, especially if we're selling off from all-time highs. And I can give you countless examples on gold, on YM, on NQ, any of that. All right. So I'll just quickly go over it. Let's see. YM, for example. Okay. We sold off our all-time highs here on YM. What do? We just long straight back to the upside, even though we still have liquidity to the downside. What do we do here? Sold off from all-time highs. We respected the liquidity here. We moved back to the upside. Okay. Make sense, guys? So whenever it's selling off from all-time highs, we can't really expect it to do much. All right, that's number one. So I've already accepted the fact that, I might get stopped out break even. It is what it is. It could ultimately come into here and maybe sell off. Or it could continue all the way back to the upside because of the all-time highs, right? Or it's selling off from all-time highs. All right, so I took the sell because we engineered liquidity here. We did take this out. We moved lower. And this is the reason why I was selling. Because if it is going to sell, that was a perfect area to sell. But unfortunately, and I'll tell you why I did what I did, but we've taken out the high. My entry was right here. Okay. We took out the high. We came lower. We respected the low here. And honestly, a couple of times. You can see this wick as well. We respected that. So we got liquidity below. That makes sense. We also have liquidity here as well. And this is actually inducement low. All right. Within this leg. I was waiting for the buildup in the trap. Okay. And we had the buildup here. I was just waiting for the trap. Okay. And I'll go on the 15 and you guys will see it. We got the buildup here. We also induced sellers here while respecting this low. So that tells me we still have liquidity to the downside. We came and trapped them. That was my entry. Stop loss above the LB here. Stop loss above the liquidity block here. And then my target was here. That was my target. You will pay yourself once the first leg of inducement is taken. So normally, and I'll tell you guys this, normally I always pay myself here. Okay? Normally I pay myself there. But I'll tell you, I'm human. Okay? I got a little bit greedy. And I told myself, you know what? I'm going to just hold this full to target. And it happens because I'm human, right? Stuff like that happens. Normally, I do pay myself here all the time. But unfortunately, I let my greed get the best of me. And I took no partials. 0 partials. All right? And then I went from floating quite a bit to now floating almost nothing. Do you think German 40 will go down for that liquidity? It could, right? It can obviously do that. But I have to also understand what I spoke about when I first started explaining the higher time frame. We're selling off from all-time highs. And I've also went on to other pairs and I've showed you what happens when it sells off from all-time highs. Sometimes, right? What does it do? It can leave liquidity for later. It can go all the way back up and take this out. All right, that's definitely on the cards. It can also just take this out and then start selling off, right? a lot of things can happen. If it does take this out and starts selling off, and let's say it starts engineering here, sweeps that, then I can look for something. But I'm not looking for anything up here. That's risky business. All right, guys? Make sense? But that's also, and I'm glad I talked about this because it tells you the reality of trading, right? I normally always pay myself here, but I didn't. I got greedy. So now I have to stomach the break even if I am going to stop the break even. And if it does sell off and plays out, you know, it is what it is. But I will also keep in mind, like, look, let's say price actually sells off from here. All right. Let's say market opens and there's a gap or something, and you know, it just opens up down here and we just take out something here and start selling off again. Let's say something like that does happen. All right. It doesn't mean next time I'm going to do this again. It doesn't mean next time I'm not going to partial here again. Okay. I will write it down or take a mental note of it because this happened, right? It's something I have to learn from. How much do you take off at the first partial? I like to, it depends. Like if there's like more targets along the way, and I'll give you a great example, which is a bunch of trades I took last year in 2025. It was all the longs I took here. Okay, at structural highs, I took partials of 50% and I just held. Okay, and because I had more liquidity targets, right? I had targets here, 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 and obviously all-time highs. So if I have targets like that, I will take off accordingly. Okay, if I have a long way to go to my target, I'll take off accordingly. I won't take off all of it right away. All right. Now let's go back into this. So in this example here, I'll take off about, let's say 70 to 80%, especially because it's not that far away from my target. Still get at 1 to 7, right? If I close 80%, I'm chilling. Can you show XAU last day, please? Yes, I can, but I mean, there's nothing to really talk about. Remember what I told you guys about XAU? Or not XAU, just when there's liquidity on both sides? What did I say, guys? Actually, who asked me that question? Hussein. Hussein, answer that question for me. You answer it. Type it up. All right, he's not typing. Okay, it is what it is. Yeah, exactly what you guys are saying. Leave it alone. Don't take it. Let it do its thing. You feel me? Don't trade it. If you don't have a direction in mind, don't trade it. You feel me? Now, I will tell you this though. Once this is obviously on the riskier side. We have all this liquidity here. We had this run up out of nowhere. We did take out this low, so it makes sense why we ran up. But we had this run up. We've tapped into the LB here. This is probably the only okay area to look for a sell. The only okay area to look for a sell. Once we got this, let's say we print an LB here and we start moving to the downside again, and we start building one more time. If we get this, and that's if we get it, we can look for something. But right now, it's already taken this out. There's so many different possibilities, right? This could be the engineered liquidity, or this could be the engineered liquidity, right? Let it do its thing. Feel me? Because now it's taking this out. If it wants to, Maybe take this out, continue higher. You never know. I'm leaning more towards it shorting, but obviously we'll see when market opens. But yeah, that's all I can say. Make sense? All right. Oh, we're touching 343. Damn. Yeah, I'll do another free webinar in the future, and we'll do kind of like putting it all together. So next time we'll talk about entries and all that, and we'll go over different scenarios of entries, and whatnot, and then obviously we'll bring it all together. So higher time frame, higher time frame direction, building that narrative, as well as entries. All right, guys. Hamza, you can go to sleep now. Unless you have questions, ask away. What happens if the bias is bearish? Now price induces buyers and traps the early sellers on the daily, but looking on the 4-hour liquidity is still available. Are you in the... Okay, do this. Message me on Discord. That way I can see what you're saying. Okay? And then I'll come back to this and read it again. Because I'm trying to imagine it in my head and not really understanding it. Okay. How can we know which internal point price take first and reverse? So you have to tie everything together, right? So everything we've talked about today. Let's say internal point. Are you talking about entries? Or are you talking about like just direction and stuff like that? Talk about entries. Okay. So you want to see where the overall buildup is. Okay. If let's say we have price, let's say we have some sort of LB here printed. Okay. Price moves away, builds. Okay. And let's say we get something like this as well. Let's say it comes here. Comes above. Comes to the high. We get that sell off once more. Boom. That's all you need to know. The inducement of early sellers is what you want to see. We obviously have liquidity here. That we all know. But I want to see the inducement of early sellers. That kind of confirms this is the internal it needs to take out. Sometimes you'll see there's more. Let's say we have something like this. Okay. We have this as well. And there's still liquidity. Okay. Sometimes you'll see price actually sell off from here. Let me do this. You'll see this. We take this out. You'll see that sell off. They'll take that out, and then it'll come up, take this out, and then have the move. Right? It's always tying where the liquidity is with who's getting induced. All right? That makes sense? So we build here, sure. We take that out. If you are going to take a sell here, you have to put your stop loss above the LB. Okay? Because sometimes they'll sell off, induce sellers, come back, take out this, and then have the move. All right? I hope that answers your question. Let me go on to more questions. I got to quickly run over this because you guys are asking me so many. I hope I can go through all of them. All right, what else is there? Okay, thank you, Abid. I'm glad to have helped you. No worries. No worries, mate. Okay, confluences during entry. Confluences is gonna have to be another topic on its own because there's a lot of different confluences that you have to keep in mind. All right. I will give you some. Obviously, you want to see inducement and liquidity and all that. That brings your setup. Confluences would be time, right? What time of day, what the previous hourly is looking like, what the previous 4 hour high is looking like or low is looking like, et cetera, et cetera. That's like a very simple answer. I would have to go more in depth and it'll probably take like a very long time to answer that. All right. But I could leave it for, let's say I start the webinar earlier. I can definitely leave it for later. So just remember that question and ask me again on a later date. What's the bias on NQ heading into the next week? Okay, I'll tell you this. And I want you to answer that for me. We've taken out higher time frame lows. Okay, Danny, we've taken out higher time frame lows. Do I look for buys right away? We obviously have all this liquidity right here. Okay, so we can target that. But do I look for longs right away? No, exactly. Right? Let it do its thing. Let it print the low. Let it bottom out. And then you'll catch something along the way. Right? If it goes slower, it's fine. And then let's say it goes higher. Builds. Comes into these highs. Sells off. We can look for something here. Say it comes here. Builds. Or let's say it just does that. Boom. We can look for something here. Takes that out. Say it starts moving to the upside. Come into the high again. Boom. You could look for longs again, right? You just need to see the same thing over and over again. Where we build liquidity somewhere along the way. It could be here. Let's say we build liquidity here. All right. Say we built liquidity there. Price respects it, moves away. Comes into these highs. Okay. Builds again. Sells off all the way down here. You can look for longs. Okay. Make sense? But I'm saying let it do its thing right now. It's all the way at the low. There's no point of trying to think where's price going to head to, because it could head lower, right? It can come for more lows. There's still this intact. You feel me? So that's still intact, right? I'm not going to look for every single low that I can possibly come to, because then I'll just be looking for days. We got this, we got that, right? So let it do its thing, let it bottom out, and then we'll catch something along the way. All right, let's see. Next question. Damsey, I asked you to message me. Let me check if you messaged me real quick. Message requests. How do I search your name? Oh, wow. There's a lot of message requests. You know what? You post the chart in here. If you can post the chart in the chat, Damsey. And then yeah, just post the chart of what you mean, and then I'll answer it. Okay? Because I'm trying to imagine what you said, but I don't know if I'm imagining it correctly. All right. Let's see. RK123. I literally just talked about bias today. A daily bias, weekly bias, all the same thing, right? The markets are fractal. You build bias by liquidity and inducements. Both of those, not on its own. When you put it together, you will build your bias. All right? Because if we have liquidity to the downside and we've induced buyers, what does that tell me? I can look for shorts, right? If we have liquidity to the upside and we've induced sellers, I could look for longs. For example, NQ right here. We have liquidity to the upside. We've taken out lows. We've induced sellers. It means I am interested in it going to the upside. But I have to wait for price to do that, right? I'm not going to try catching a short all the way down here. That's risky business. It's like catching a falling knife. All right? What else? I understand price hunt liquidity, then I plan confirmation entry and high time frame build. That's right. I understand price hunt liquidity, then I plan confirmation entry and higher time frame build. That's right. Brother, can you like reword that question? I'm not really getting it. Or maybe I don't know, throw it into ChatGPT and then paste it in here. What else is there? I'm a lifetime member. I want the job eventually. How should I start? And how long does it take to become profitable? I'm also finding the course content a bit difficult. Do you have any suggestions, the best way to approach it? Honestly, I would say watch it a couple of times because you have to understand when you watch something once, you're going to understand it to a certain extent. When you watch it a second time, you'll be like, oh, damn, I didn't realize this before. You feel me? So there's a lot more that you can catch from watching something, a bunch of times. And obviously you have the question section. You can ask questions there, et cetera, et cetera. Now, when it comes to how long will it take you to become profitable? It depends person to person, right? How easy is it for you to understand, right? How easy are you able to grasp the concepts? What else is there? Oh, Tom already answered your question. Okay. How do you use this strategy on intraday? What time frame? Believe it or not, I talk about higher time frame a lot, but guess what? I'm taking intraday trades, right? So whatever I just talked about today, you just got to do the same thing. Start with the higher time frame, because look, you have to understand where price is on the higher time frame. Okay, so on the weekly, you got to see where price is at. Then you got to go, on the daily or the 4-hour, build your narrative, see where all the liquidity is at, who induced, et cetera, et cetera. And then you got to see on the hourly, So if I just look at NQ right here, and let's say I start off with the weekly, okay? What is the weekly telling me? Weekly's not really telling me much. So this is where I go down to the daily. What is the daily telling me? Daily is telling me something, and the daily's telling me this. We've induced buyers here. That's what the daily's telling me. Okay. I opened up the 4-hour because it was too compact on the daily. What do I see on the 4-hour? Pretty simple, right? We've topped out at this high. We sold off. We started respecting lows. We've induced buyers. Okay. Then we sell off again. And we don't take out the high here, which is fine because sometimes price doesn't do that. It sells off from this high. So from here, I won't be looking for a sell, but I can look for something here, right? What does it tell me? What is this all doing? These highs being taken out, what is it telling me? I can look for something to the downside. Make sense? So that's building my bias from the higher time frame, the 4-hour. And then let's say I want to look for intraday, right? What can I do? If price is here, I want to sell, right? If, let's say, for example, we have liquidity to the upside. We've just taken this out. I can look for some sort of bias within here. You just have to go with it accordingly, right? Where we're building liquidity. For example, if I look on the hourly, I'm going to delete all this. We took out lows here. Okay. Price comes into some sort of LB here. And we have liquidity above. We have liquidity here. And this is, let's say, a trap high. Okay, why? Because we broke structure to the downside. Make sense? What do? We trap the buyers. There's an LB, some sort of LB here. Look, some sort of LB here. You can look for longs. You feel me? So you got to build your narrative from the 4-hour and work your way down to the hourly. Okay. So the 4-hour is telling me that sells are pro bias and longs are going to be counter bias. That's what the 4-hour is telling me. Okay. I go on the 1-hour and I can look for something within these areas. Why? Look at this. I'm on the 4-hour actually. Look at this. We've just trapped buyers, right? Induced sellers. I can look for some sort of longs because this is an LB towards the liquidity up here, right? All right. I hope that answered your question. I'm going to continue on. I'm finna go to sleep. It's 1 a.m. Yeah, go to sleep, Hamza. Go to sleep. I don't know why you're still up. All right, let's see. Can you show us how you journal? I can actually tell you how I journal. Number one, I start off with the 4-hour because I usually know what the daily and the weekly is looking like. I'll start off on the 4-hour. And let's say I took some sort of trade here. And I'll actually give you a good example. Okay. I took a trade here. All right. And at the time, I thought price was going to go to all-time highs. Okay, I'll be honest. At the time, I thought price was going to go all-time highs. I took partials, so I already paid myself. Okay. And I completely forgot about this right there at the time. I looked for longs here, took that trade. I'll be marking it all out. Okay, explain it to myself, everything on the 4-hour time frame. I'll use this tool right here because I love using this and type on it and all of that. I'll take a screenshot, post it in my journal. Then I'll go down to the hourly, 15-minute, all those time frames. And I'll also do something extra too, which, not a lot of people do. But I also, what's it called? I also journal my emotions. So what the hell I was feeling at the time. Was I nervous? Why did I risk so little? Why did I risk so much? Et cetera, et cetera. Because I have to know why I'm risking the amount I'm risking, right? Got to know that too. For example, the German 40 shorts I took, this is definitely going into the journal. And the emotional side is what? I was greedy. Simple as that. Notion or TradeZella? Honestly, it depends on you. I don't like using. I like doing the manual work, so I do use Notion. But you can obviously use TradeZella if you want to make it automated and stuff. I just like putting the manual work in. Because TradeZella, yeah, obviously, it'll tell you where you took the trade, et cetera, et cetera. But I'm already on the charts. I'm gonna mark it up. I like to explain it, all of that. I know you can do that on TradeZella too. But Notion, I've always been using, so I just stick to it. All right, what else? Let's see. This guy said, now it was Saturday. I'm up until 3, 4 a.m. Yo, GG's, bro. Go to sleep, fam. Why don't you add general chat session on Discord? What do you mean? We have a general chat for lifetime members. How do you go about backtesting this concept? Well, number one, you start off. Okay, honestly, everyone that's here and that doesn't have the, let's say, the course content. Okay, we actually have a lot of videos on YouTube, and if you, let's say, this is how I say do it. Start off with the videos on YouTube, right? If you're not part of the lifetime members, start out with the videos on YouTube. Watch that. And when you watch it, don't just watch it. Okay. I want you to watch it and then hop onto the charts. and see if you can do whatever you just watched. And I don't mean trade breakdowns. I mean those other videos where Marco talks about where liquidity is, what inducements are, stuff like that. Okay? I want you to actually watch the video and then try applying it on the charts. Right? Because you need to also put in that effort as well, right? Just because you watched it and you understand it mentally doesn't mean you're going to have the experience to put it on the charts. Okay? So whatever you be watching on YouTube, right, from Marco, whatever, and I don't mean the breakdowns, because the breakdowns obviously you get to that later and you try doing that yourself later, but start off with those videos like what are inducements, one of those type of videos, and then apply on the charts, practice it like that. And this is even before back testing, okay? Just understand the concepts, because understanding it theoretically is one, but understanding it on the charts is a whole different thing, okay? Put on the charts, understand it that way, then start heading to back testing. And when you start back testing, obviously you want to build yourself the narrative first, because you need to know the direction before you can even look for any trades, right? So you hop onto the higher time frames, build yourself with a narrative. Maybe one back testing session, forget about entries. Just figure out where is price heading to on the higher time frame. Okay? Literally go on replay, mark out certain liquidity points, play it out, see if it gets taken out, why it got taken out, et cetera, et cetera. Explain it all to yourself, write it down, journal it, all that stuff, okay? That's literally how you're going to learn. Just watching videos is obviously going to help you understand, but you also have to implement it on the charts as well, right? So you have to understand, like, whatever you guys are watching, if you don't apply it yourself, you're just going to understand it theoretically, okay? And you have no experience on the charts. Then you're going to head to live markets and get slapped by the markets. It's not recorded, okay? I don't know how I'm supposed to upload something that's not recorded. Thank you, Abby, for this webinar. I'm glad you learned, okay? I don't really know how to... Damn. I appreciate it. Let's say that. No worries, guys. What indicators do you use? I don't like to use indicators, but I do have a indicator that we built ourselves, which is just marking out the previous 4-hour high, the previous weekly high, the previous daily high, stuff like that, right? That's about it. I don't use anything else. And to be honest, even right now, you see my chart, I don't have an indicator on. Also, maybe Asia indicator, those two. How long it takes for you, Abbott, to become profitable? It took me not too long because I had more time than everyone else. When I got into trading, I just graduated university, and what do you call it? I told myself I'm not going to start looking for, to be honest, it was not during COVID, but it was like a year after COVID. And I told myself I'm not going to look for a job in my field right away. I told myself, you know what, let me try something else out. And, if that works, then I stick to it. I got introduced to trading. And the thing is, I was living at home, okay? I had no bills except for a phone bill. So I didn't really, and what I did was I just had no social life. Guess I taught Avid the way. You're funny. Anyways, so I had no social life at the time, okay? I literally just locked myself in a room. I didn't obviously physically lock myself in a room, but, let's say metaphorically. I stayed in my room all day, looked at the charts, analyzed it, and just kept taking L's. You have to understand the way to learn in trading is through your L's. You feel me? Like, for example, and this, I'll keep going back to this example. I took this short on German 40. To me, if I get stopped, I'll break even. right? I have to learn from it. I don't just sit there and be like, you know what? It is what it is. Yes, I will say it is what it is so I don't feel emotional about it, but I'm always going to journal and write down why I got stopped out or why I got stopped out break even, you know, et cetera, et cetera. So I know most of the times, okay, not most of the times, I always partial at these inducement lows just in case something like this occurs. And sometimes I'll be floating a line. I don't want to sit through all that pullback or the entire pullback. So what do? I partial a little bit, right? Or at least half. Okay. Bare minimum, I partial is half. So I've paid myself at least half the position. Okay. Especially if my RR is amazing like this. Okay. Because this was the entry. And then right here, I get a 1 to 7. Right. And this is me taking it off the 1 hour time frame. That's why I don't mind taking higher time frame trades, right? I'm not sitting here on the 1 minute like a 1 minute warrior. You feel me? Like I'm gonna take it on the higher time frame. Once it takes out liquidity, I'll take my partial, right? If I partial 50% here, I'm chilling, right? And obviously, if it goes to target, I make more. And if I get stopped out break even, I get stopped out break even. You feel me? So definitely gonna be journaling that. And I have to learn from that. It's all about trial and error. So I started off, and the thing is, I had so much time in my hands when I started, because I had nothing else to do. I just graduated. I had a phone bill. That's it. So all I did, I just literally just glued myself to my computer. Honestly, it was low key depressing, but yeah. How did you find trading? Funny thing is, I got into trading because my brother got scammed. So he got scammed. He told me about it. At the time, obviously, he didn't know he was getting scammed. And then I kind of got into it, and I seen people actually genuinely making money from it. And I was like, yo, you know what? I'll try it out and see if it works, and if it does, then it does. Then I got into it, and I just really liked analyzing the charts. You feel me? Like in the beginning, obviously, you come into it for the money, but then you have to actually fall in love with the game. You feel me? That's how it goes. Uh, Someone added a screenshot somewhere. I think I see it. Where is it? Wait, I'm confused. Did you message me that or did you? Oh, okay. What happens if the bias is bearish? Now price induces buyers and traps the early sellers. Okay. Okay, this is something I can talk about. Thank you, Damsey Hubie, for that. Um, let's go back to the chat here. Where's the chat? Where you guys at? Okay, right here. You were talking about Euro. All right. So Euro is honestly, I'll tell you right now, very ugly. Okay. We had this move to the upside, and I wanted Euro back to these highs, but I also have to understand that price doesn't always take all those highs to the left. Okay. We've taken this out, and okay. So just because we haven't taken this high to the left, I also have to look through the different time frames. So I go on the daily. You know what? We've actually taken out this daily high here. So this right here was just me refining. Okay? That's one thing. Daily, I'll go on the weekly. We've taken out the weekly highs already, and we're shorting. What does that tell me? Low key, this can sell all the way back to the downside. And what do? We take out the previous daily highs here. You can look for shorts. You feel me? I hope that answers your question. If I didn't, then I do apologize. Maybe I didn't understand. But that's pretty much it, right? You have to look at it in that case. Okay, we've taken out the liquidity we need to take out. We have a ton of liquidity to the downside already, right? We can look for shorts. And what do we have here? Boom, low respected, low to the left respected. We move up, break structure to the upside. We can see something here. We can look for something here to the downside. Make sense? All right. My real problem is choose the good liquidity block. Okay, liquidity blocks are, I feel like a lot of people overcomplicate it. There's two types of liquidity block. Okay. One is, let's say, external. And then another one is internal liquidity blocks. Okay. External, internal. External would be the ones that are, let's say, major highs and lows. So let's say, let me look for externals. You know what? Just keep in mind, external, internal. Okay. External liquidity blocks would be these. This would be an external liquidity block. On the 4-hour time frame, this is irrelevant. This is a high that gets printed. Price moves away. Okay. This right here would be an external liquidity block. Simple? Make sense? Okay. So internal liquidity blocks would be the liquidity blocks that are in between the price lag. Literally as simple as that. So if we have, let's say, price moving to the upside or here, and let's see. So we get something like this. Okay. External is this right here. That's the external liquidity block. Price comes above here, we can look for something, right? Obviously, there's more to it, but nonetheless, that right there is an external liquidity block. Internal liquidity block would be liquidity blocks within the range. So if this is the high and this is the low, internal will be anything inside of here. Obviously, in this scenario, there's no internal liquidity block here. But let's say we were to have this. Okay, boom. Let's say we were to have this. Okay, internally, that internal liquidity block there. Or actually, let's say that was not a great example. Let me just mark it out like this. Okay, we take out the low, take out the high. We print an LB, we start moving to the downside. Okay, so external, simple, right here. Internal would be anything within the range. So from this high to this low, anything within there. So let's say we have some sort of internal liquidity block here on the lower time frames. Okay, and it looks like something like this. Boom. Okay, let's say that's on the lower time frames. That would be an internal, or let's say this is the 4-hour. On the 1 hour, we get an internal liquidity block there. Okay. Now, obviously, now you're gonna be like, which one do I choose, right? Which one do I choose to take it from? It's all about where we build liquidity. So if we build let's say we have this internal liquidity block here, something like that over here, and we start building liquidity here at this high, we get that sell off. Okay, and then we come here, price sells off again, and then we take it out. That's why we took that out. And this is the liquidity block that's going to be used. Make sense? But if we had, let's say, some sort of high over here, the price came towards and started building here at this high, then it'll use this to go lower. That makes sense to you guys? Okay, perfect. Sometimes I find it easier doing line chart. Do you use line chart? No, I don't. I stick to candle charts, candlesticks. You guys are getting too much value. All right. This guy said I would need a new mouse again. Yo, relax. Don't wish that upon me. How did you find Marco? Uh, it's damn. We were in the same trading group, and he was, let's say, he was taking trades that just made me very interested. I was just like, me, I'm just someone that likes to understand things. Okay. Doesn't necessarily mean I'm gonna apply it onto my charts. I just like understanding people and their whole thing, you know? So when I started seeing his trades, I was kind of interested to see what he was doing. So, got in touch with him. I actually found out he wasn't that far from me. He was like, let's say an hour and a half, 2 hour drive. I hit him up. I realized he's from Canada. And then we got in touch. And there you go. You feel me? Can you briefly talk about relevant BOS? Relevant BOS. See, me, I don't like to differentiate BOSs, okay? All the breaks of structures, all the change of characters, whatever you want to call it. I like to classify all of them as break of structures. The only reason is because I have other things kind of confirming if we're going to continue or if we're going to, take out the low again. And we obviously talked about that where, if let's say we had something like this, let's say we had something like this. Let's say, actually, let me just redo the drawings. Let's say this is for entries though, okay? We sweep something from the left, we start moving to the upside and we take out this high. Okay? We've taken out this high here. Now, I'm going to classify that as a break of structure, okay? But now I also look to the left and see if we've taken out the overall liquidity. If we haven't, then I will still look for continuations even though we've had this break of structure. Okay? And if there isn't a break of structure, or let's say, or there is a break of structure and we've taken out the liquidity, then I am not going to take it. Make sense? Because this can happen. And then we can long. All right. What if the liquidity to the left is only seen on lower time frame? Yeah, it could be a wick, bro. It could be some sort of wick that's respecting to the left over here. You feel me? Can you write a few strict rules you use going into the charts from bias to entry so we can screenshot or write down? Okay, so strict rules for what is it for? From bias to entry. Damn, that's a lot to write down. You know what? Damn. Okay. Start off with the higher time frame. Build your bias. Obviously, like I spoke about today, was all about bias. No, that's all good. It's just like I have to think about it, right? Yeah. So, um, what's it called? Build your bias. That's number one. That's rule number one, right? And that's strict rule. Why? Because if I don't know where the hell price is at on the higher time frames, I don't know the direction. You feel me? Number two is heading to the lower time frames, or let's say intraday time frames, not lower time frames, intraday time frames. I gotta first, and this is another rule, I need to know if my trades, or let's say if I'm gonna take a long, is it going to be counter bias or is it pro bias? That's what I need to know. Okay. Then I head down to lower time frame. Okay, maybe the 15, maybe the 5. I do tend to, and this is actually another thing I'll tell you guys. I look for a higher time frame entry first, and then I look for a lower time frame confirmation along the way. If I get that higher time frame entry, I am chilling. I don't need another trade because I'm always looking for that higher time frame play. Okay. Now, if I get a lower time frame confirmation, I'll take that as well. You feel me? And I'm not bothered. The reason I take that higher time frame trade is because then I'm less itchy to take another trade. Now, if it gives me something clean, I'll take it. If it gives me something that's not so clean, I won't take it. Make sense? So taking that higher time frame entry first, low-key stops me from taking a early entry, or I'm able to be more patient that way. And then what else? Rules all the way down to entry. So then I obviously go down to the lower time frame and I look for that entry model, and I have to wait for a clean setup. If I'm gonna be on the lower time frames, I'm not risking it. You feel me? Higher time frames, I'll take it, but lower time frames, I'm not trying to risk it because I do play with a larger account size. So an L for me is pretty big. What else is there? I think someone asked me about, do you take continuation trades or more extreme entries? It's not really extreme if it's a higher time frame entry, right? It's going to be a continuation on the higher time frame. But yes, I do look for continuations. I don't look for reversals. Or I do some, it depends. Okay, if we have engineered liquidity, then I'll take it. Actually, even, sorry, I got your question wrong. Continuations, yes. I look for continuations most of the times. Extreme entries, I like to let it like actually bottom out. So if I'm looking for longs, I would like for it to bottom out, and then I'll look for a continuation rather than the extreme. I thought you were talking about pro bias, counter bias. That's why. But that's pretty much it. Can you give examples of weak from the left? What do you mean? What do you mean by that? Most of these questions now are good. Actually, yeah, that's true. That is very, very true. I'm liking the questions now. Before, I don't know what type of questions I was getting. How can we know price was respecting liquidity for future? What do you mean? Like price is respecting liquidity. Like if there's liquidity, right? Let's say we have high respected, price sells off. Okay, we have liquidity above. Now, for it to respect liquidity, we need price to come back, not take it out, and then move away. And possibly take out some internal, right? So let's say it takes some internal over here. Boom. Obviously, this is a terrible drawing, but I hope that makes sense. Can you explain what an inducement high or low is? Okay, so inducement high or low. Let's see. Inducement high or low. This goes into one of the trade setups that me and Mark will actually like the most, which is called the Da Vinci. I'm pretty sure maybe it's on YouTube. I don't know. So let's say we have some form of liquidity to the left over here. Okay. So we got some form of liquidity to the left over here. And we got price moving into the highs. Okay. Respects it and takes out that liquidity. All right. And let's say it actually does something like this where we induce higher, build more liquidity up there, take it out. Okay. Now, inducement high or low would be simple. Okay. It is literally the high or the low or the last point of internal. So let's say we have this leg over here. This leg over here. The last point of internal liquidity would be the inducement low. It's just market. It's just something that Marco and I just gave a name to, right? Because sometimes what happens is, you'll have some sort of internal over here, and then price will come into the extreme here, and because it's some form of liquidity block, it will respect that and come all the way down to the inducement low, and then have that move up. Make sense? No, I'm not Moroccan. Okay, now, this guy said 31. Yo, relax. I'm not 31. Yo, Abu, you're going to timeout, buddy. Save 40, save 42 one more time. You're getting timed out. I think. Wait, what am I? Yeah, I'm 26. Wait, yeah, 26. Yeah, I'm 26. Nah, you know what it is? I don't be uh I don't be celebrating my birthday. You feel me? So I don't keep track of it. Can you please explain how to track correct liquidity from higher time frame to lower time frame? We'll do that. Okay, so I've already talked about higher time frame today. I hope it makes sense. Now, what do you call it? Yeah, I hope that made sense. Obviously, we'll on a later webinar, so a webinar in the future, we'll do the higher time frame as well as the lower time frame and just break down price as we go, right? Kind of like building it all together type thing. Um, let's see. Bro, don't know how old he is, but yeah. I don't be celebrating my birthday, like I said. Time is to yes, I just realized 4:32. Wow. Okay, I'm gonna wrap it up here, guys. Um, yes, guys, whoever, if it's time for bed, just go to sleep. I'm just yapping at this point. Feel me? So go to sleep, guys. All right, I'm gonna wrap it up here. I will see you guys on another webinar. I'm not sure when I'll do it, but I'll definitely do another one sometime in the future. And also, guys, if you're from the UK, let me know because I might be going there. All right, let's wrap it up here. I'll see you guys at a later day. Take it easy, guys. Ciao.